In the energy quadrant, crude oil fell again, down 1% toward the settlement, down over 1.5% on the lows. Most of it based on demand fears. Fears that future demand will be weak has definitely been capping crude over the last few days. Part of that having to do with, again, the tensions in the U.S.-China trade deal. We're seeing equities continue to sell off based on that. Tonight is the deadline for the U.S.-China trade talks, and that sort of imposed tariff addition or extension that President Trump promised set to go into effect at basically 12:01 this morning. So we'll see if today's negotiations between the U.S. and China, which are ongoing, a chief trade negotiator from China set to have dinner tonight with Robert Lighthizer, who's one of the chief negotiators for the U.S. We'll see if that goes any better, if they potentially put that deadline off a little bit, they take the entire tariff threat out of the picture, sign a deal potentially, although it would have to be signed by President Trump, President Xi Jinping. We don't know how that's going to play out. But so far, that might be part of the reason that the bottom is holding in crude. At least the short-term bottom that was put in on the 2nd of May is holding so far. And by that, I don't mean the ultimate low. On the 2nd of May, we got down to about 60 and change. We've gotten down lower than that over the last few days, 60.02. We might have even briefly broken 60, depending on which contract you're looking at. But we seem to continually settle above 61, and that's kind of the basing, the bottom holding that I'm talking about over the last 4 or 5 trading sessions. That seems to be holding right now. But then again, looking toward that demand curve, refinery utilization has now been lowered 2 consecutive weeks. Part of that is the start of refinery turnaround, but it's not a good time to see that because refineries enter turnaround, and then if they don't come out with a bang, going back above that 90 percentile in refinery utilization, which happened 3 weeks ago, but now we've gotten an 89 number, and then this week we got an 88 number. That shows weakening demand at the refinery level, which is immediate demand for front month crude oil, for the crude oil that's being refined right now, and that has weakened over the last 2 consecutive weeks. So we need to see that get better once we get out of turnaround. Probably not likely to show its face unless we get some sort of resolution to this U.S.-China trade negotiations that are currently going on.